Mortgage rates have tumbled in the last 48 hours due to the 10-year treasury going down, which also was caused by some of these bank collapse. So let's bring up some articles for you guys, and maybe we'll put these articles in the chat as well. All right. Let's bring up the first article. For those of you who don't know about the bank collapse, you put it up already? Okay, there we go. There we go. So I'm not going to read this whole entire article. I just want to get to the point of why the banks failed. So I want to scroll to that on my end. So it says Silicon Valley Bank, SVB, failure explained. This was put out a little while ago by USA Today. So Silicon Valley's customers, who were largely startups and other tech-centric companies, started becoming needier for cash over the past year. That led to them withdrawing money from their accounts. SVB, meanwhile, needed to keep selling its assets, mainly bonds, at a loss to free up capital so that customers could withdraw funds. Let me repeat that. SVB had to keep selling their assets, mainly their bonds, at a loss to free up capital so that customers could withdraw their funds. But the bank got to a point where those losses were so high, consumers began to fear that SVB couldn't guarantee access to every customer's funds. That fueled a massive bank run, which caused the FDIC to step in. Wow. Yo, that's crazy. So you trying to tell me a bank didn't have no money? Yo, you can't make this up, y'all. Now, look, we only reading what the news is telling us. I'm pretty sure there was a lot more underlying factors than this, right? I'm not going to sit here and pretend like I got the inside scoop on SVB and the workings, but I guarantee you guys there was a lot more to this. I'm just telling you what I read in the USA Today about 30 minutes ago explaining this, and I just wanted to explain this for you guys, for those of you who didn't know. I'm not going to go into deep details about this bank failures and make my own speculations. I really want to talk about mortgage rates in today's episodes and why you need to buy real estate. But let's go to now Signature Bank. Signature Bank, let's scroll down. And I'm not going to talk about the deposits they had and everything like that. Y'all can read the article yourself because I'm on a time crunch today. We got a hard stop today. So where is this one? Signature. This is a long-ass article, too. All right. Why did Signature Bank fail? Signature Bank, and you know what's so crazy about Signature Bank? They opened up in 2001, from what I was reading. I started banking with them in 2004 when I first really started in the mortgage business. Signature Bank is the first bank I opened up a business account at. That's crazy because they're headquartered here in New York. So my broker at the time, he was banking there, and he recommended me to go bank there, and that was the very first business bank account that I had at Signature Bank. They had great service, everything was top notch there. So I'm kind of a little sad to see this because it has a little sentimental value for me in my own personal life because I actually banked at Signature at one time. But Signature Bank is a New York-based financial institution that became a big lender in the crypto industry. Was ordered to close over the weekend. That bank was part of only a handful of financial institutions allowing customers to deposit crypto assets. That didn't bode well for the bank when crypto plunged as a result of the FTX collapse last year. Signature board member Barney Frank, a former congressman who helped design new financial regulations after the 2008 financial crisis, ultimately blamed SVB for its collapse. It was a SVB-generated panic, he told the Wall Street Journal. We were fine until last couple of hours Friday. That sounds like cap. I'm sorry. Hold on. My man Barney Frank said, we were fine until Friday afternoon, and you closed on Sunday? And you got shut down on Sunday? Come on, bro. Yeah. Barney Frank, you sound like you're talking a whole lot of cap right here. I'm sorry that I'm just calling it how I read it, ladies and gentlemen. This don't sound right. You wasn't fine. There was some underlying factors of things going on. here at Signature Bank. Allegedly. I don't want to get sued, so I'm going to say allegedly, right? But this sounds crazy to me that you blaming SVB collapse. What happened to all other banks? No one else collapsed? No, I think it had to do with the crypto plays. Me personally. But I know Signature was a heavy hitter in commercial real estate and funding commercial deals too. So it's interesting to see how that's going to shake out in the next couple months now that a big major commercial real estate funding source is gone. So that's going to be interesting to see, right? So look, this is what I'm going to do, because I'm not going to sit here and read this whole article. You guys can read this on your own. I just wanted to explain, and look, let's get some more likes in this video, please. It's about 500 of y'all. I just put the link to the USA Today article. You guys can go read that, right? Now let's go to the mortgage rate conversation real quick. Before we go to the mortgage rate conversation, go to the bank failures slide, right? So now, this is, and I'm going to send this one in the link too, right? This is from bankrate.com. Bankrate.com. They put out a list of, and I'm going to put this in the chat, in the live chat for y'all as well. So y'all can read all about the bank failures. But I wanted to, because for the past couple days, I've been seeing a lot of content going out there about bank failures. There's more bank failures that happen. 2008 and 9 is going to repeat itself. More banks are going to go out of business. I've been seeing all this type of content. We've been kind of quiet on this subject because I was like, yo, let's just let this play out. We got other things we're doing right now. We had the webinar this weekend. So I wanted to kind of focus on that. I want to show you guys this, right? And this is why you got to take everything with a grain of salt. Can you make it bigger? Pause. Because I'm looking at it here on my screen right now. It's kind of small. Yeah, make it a little larger. A little bit larger, if you can. Because you can't really see the numbers. All right. Now this is better, right? Now, stay right there, Tooks. This is showing you that since 2009, y'all, 2009, there has been a total of 513 bank failures. But I want you to scroll to the bottom of this so we can get to 2009, right there. So let's look at, scroll up some. Scroll up. Up, Tooks. Yeah. To 2009. So that way 2009 is at the bottom, not nothing else. Yeah. So at 2009, there was 140 bank failures. 2010, there was 157 bank failures. And 2011, there were 92 bank failures. Somebody add that up. How many bank failures is that in 3 years time frame? Add that up. 140, 157, 92. 140, 57, 92. Put it in the chat real quick. How many bank failures was that during the Great Recession of the subprime crisis? 389? Because I'm not pulling out my calculator. So if you want to look at this, right? When you see videos of people that are out here making videos right now, and if you see anybody trying to compare this to 08, 09, 2010, I want you guys to be very, I don't care who the person is to. I want you to take their content with a grain of salt from this point moving forward. Because when you look at how can you compare, some of y'all said 382, some of y'all said 389. I don't know who's right because I'm not adding this up. But either which way, I don't think we'll ever see something like this ever in history again of that many banks failing in a short period of time. And if you look at the years prior to, you still have some trickle effect, but you can see from 2012, 13, that number is decreasing every single year. Even scroll up now, scroll up, Tooks. Now, in 2018, there were no bank failures at all. 2019 and 20, there were 4. And those 4 failures happened after America shut down, right? And they even break this down in this bank rate article, which I'm going to put again. You guys can read this article yourself, right? And I'm giving you this, and I put both of these articles in here just so you guys can now start doing your own due diligence and own research So you don't really depend on people who are making content because everybody has an agenda, right? Look at these numbers. You can't compare the past to what's happening right now. The underlying conditions are different. This is unfortunate. This is unfortunate that these two banks failed. And these were big banks. These were not small banks. But they took a lot of risk, right? They took a lot of risk in the type of companies and things that they were funding and doing business with. Tech is risky right now because of what's happening in the marketplace. Crypto, risky, right? Crypto damn near crash.
Yeah.
You know what I'm saying? So there's a lot of different things. And again, guys, there's always underlying factors to all these different types of things. So I'm pretty sure it's a lot more than what we know right now that really ultimately caused the demise of these two banks. But I just wanted to show you guys this list so that way you can really understand. In the past 2 years, there's been no bank failures. And in 2020 and 2019, there was 8 total. Banks fail all the time, apparently, right? According to this, but it's not something that happens often. Obviously, this is going to be big news today because it hasn't happened in 2 years.
Yeah.
And these were two, I think SVB was like, according to assets, they were like the 16th largest bank in America. Many of us probably never even heard of SVB until this week of when they failed. So I'm going to tell you this. Don't panic. Don't panic. The FDIC is, according to reports, is insuring everybody's money. So you'll be able to pull out your money out of these banks. But don't just start pulling out your money because you don't trust the banking system. The banking system clearly has shown that it made its mistakes in the past, and regulation has kept banks open and kept banks afloat. Now, will there be more bank failures at some point? Absolutely. This is stuff. People go out of business every day for making bad business decisions. It happens all the time. And we will continue to see that. But I don't want you guys to be alarmed and kind of going crazy thinking if your money's protected or anything like that, right? Your money's going to be protected if these banks fail, but diversify your money because, you know, the FDIC only protects, they're supposed to only protect up to $250,000. If you got more than $250,000 in your checking or savings account too, I think you should reevaluate your situation anyway. I think you should start learning how to trade your money in the stock market and stuff like that to make it earn money because inflation is eating out your cash anyway. But that's another story for a different day. Well, but no, we're going to talk about that today. Now, let's go. So does mortgage rates go up or down depending on bank failure? Has nothing to do with that. Sydney, I'm glad you asked that. But in this case, it did. Let's go to the mortgage rate conversation, right? And I'm going to put this CNBC article that came out today in the chat for you guys to read on your own. And let's go to mortgage rates tumble in the wake of bank failures. Now, the average 30 rate on the popular mortgage, make it a little bit bigger. It's kind of small. Pause. Yeah, that's good. Yeah. So the average 30, and I'm just going to read the key points, and then I'm going to go on my own rant. The average 30-year rate on a 30-year mortgage dropped to 6.57% on Monday. If rates continue to drop now, buyers could return to the housing market once again. Another bullet point says this mini banking crisis has to drive a change in consumer behavior in order to have a lasting positive impact on rates. It's still all about inflation, says the chief operating officer of one of my favorite sites, Mortgage News Dailies. Now, type in mortgagenewsdaily.com because I know it's already up there. Let's go there.
Okay.
Right? So now, scroll down. So now, Mortgage News Daily, guys, I tell you guys all the time, this is the website that I use. Make it bigger. Pause. So that way the chart is bigger. Yeah, there we go. So this is something that I tell you guys all the time. I use this website. Use it yourself to track mortgage rates, to see what's happening in the market. You see CNBC is quoting everything from here, right? It's a super credible source that most of these news outlets are using. Mortgage rates right now on a 30-year fix with A1 credit, 20% down, primary residence around 6.5%, right? Last week it was just a little bit over 7%. So the bank failures did in fact help mortgage rates, but it helped the 10-year treasury. See, the mortgage rates loosely follow the 10-year treasury. And the 10-year treasury, as that falls, mortgage rates fall as well. In most cases, right? There's some cases it doesn't, but in most cases it does. So the 10-year dropped, and I think if you scroll down, they might have the 10-year chart up here, right? Yeah. Stop. Wait, hold on, go up. Yeah, so the 10-year chart is right. So you see it's down to 3.5. No, the 10-year, right there. Just stay right there. The 10-year is at 3.5%. I think last week that joint was like 4.5, 4.6, somewhere right there. So that significant drop is why you see mortgage rates drop. But we have, and you can kind of see like the little chart on the bottom right there too. Maybe I need to have, because I think you told me this before, to have a class kind of breaking down, like how MBSs work and a 10-year treasury. Maybe I'll do a class like that, because this is what really controls mortgage rates and really how you can kind of time if it's a good time to lock in or not, or if rates are going to go up. Maybe I'll have to do that. But I'm saying all this to say, this website is Mortgage News Daily. Mortgage News Daily. Type it in chat. MortgageNewsDaily.com. All right. I'm saying all this to say, mortgage rates is all about timing. You can take this off the screen. Mortgage rates is all about timing. Things happen all the time in the market that fluctuates the market. It's just like the stock market, y'all. When you see the stock market going up, down, left, and right, same thing happens with mortgage rates. Just on Friday, we were quoting people almost 7% because it started to dip a little bit once that news came out, because the 10-year treasury started to dip after, I think last Wednesday is when they announced this first SVB failing. And then now, this rate is going down, but it fluctuates all the time. So it's all about the timing. If you're not in contract, you can't take advantage of these rates. And this is why I always tell you guys, stop waiting, right? Go out here and execute at the highest level when you're talking about buying real estate, because if the rates do drop like they did, 50 basis points, you ain't in contract. You can't take advantage of this low rate right now. If you're just gonna say, oh, rates drop, let me go start house hunting again, you're behind the 8-ball. It's nothing that you can do to take advantage of this. If this thing drops another 50 basis points to 6%, doesn't mean it's going to stay there. These things move up and down, left and right. And we have so much news coming out this week now. We got the inflation report that comes out tomorrow. That's a big report that's coming out tomorrow. And if inflation is not, that number's not decreasing at a level that the feds are happy with, they're going to probably do what? Raise the federal funds rates. And that could offset and trigger so many different things, right? So, yes, mortgage rates did tumble. Bank failures, generally speaking, have nothing to do with mortgage rates dropping or going higher. It's all types of different factors, but the most important factor with the rates dropping is the 10-year treasury. If that 10-year treasury continues to go down, and if inflation now goes down and beats the estimates of the experts, then it can go even further down. So the moral of the story is, lock in your damn interest rates when you have the opportunity to. Lock in your contracts. Don't be out here. And I don't care what Robert Kiyosaki just said, don't buy real estate. We're not listening to him or anybody else. Listen to your damn self. Right? Don't even listen to me. Don't even listen to me. Listen to yourself. Listen to the numbers. Do the numbers make sense? I don't care what none of these experts say. if I see a deal that makes sense and is making cash flow, I'm going to buy it. If I want to buy a new house and these rates got a little bit cheaper for me and I was already house hunting, I'm going to be more aggressive to go find me a house. Because what I want to do is take advantage of the drop before that thing go back up.
So my question is, how did these two bank closures, they did not affect the interest rates, you're saying? Because normally they don't.
Directly, no, but indirectly, yeah, because people are panicking and worrying, right? People are in panic mode. The 10-year treasury wound up going lower. That's what directly impacted the mortgage rates, was the 10-year treasury going down.
Now, these bank closures didn't affect the 10-year treasury, or they did?
Directly and indirectly.
Okay.
Right? It's news. And these things are traded on the markets. So when you're dealing with the volatile market, bond markets, stock markets, everything like that, it's volatility. Any news that comes out can send certain, yields going up or going down.
Yeah.
It just depends on what news is coming out and what's happening. So all news generally impacts rates, Federal Reserve decision making, et cetera, et cetera. So indirectly, yes, it has something to do with it. But when I see people saying, because if more banks fail, will rates continue to drop lower? No. Realistically, it shouldn't. But who knows how the markets overall are going to react to everything. My whole thing is, what I'm trying to tell you is, go out here and make wise real estate decisions. Period. Make wise decisions. Make wise decisions. A lot of people are not making wise decisions. A lot of people are letting the news and everything scare them. And what does this mean for the market? Only time will tell, Christian. Who knows what this means for the market? We can't predict none of this shit. What you can predict is, what does this mean for the moves that you're going to make?
Yeah.
Warren Buffett said it the best. Be fearful when others are greedy, and be greedy when others are fearful. Everybody's fearful right now. Great. So the ones who are in position to execute something, be smart, be a little bit greedy, and go out here and execute. Because you might miss your opportunity. Now, there was a report that came out. Everybody smash that like button too. Smash that like button. Smash the like button. I think we got a lot of people out on here right now. So there was a report that came out, Morningstar, I believe it was, that said there's going to be, let me see, let me try to pull this up right now. Hold on. So there was a report, I think it was Morningstar. Yep, Morningstar.com. They said there's currently 10 more banks that are at risk.
How do they know this?
The hell I know.
How do they know that's on board? I'm serious. How do they know that?
But this is what I'm trying to tell you. Everybody has speculation. And I'm not going to sit out here and say these banks' names because I don't want these people suing me. You know what I'm saying? What if they don't fail? And I'm saying, so people publish things and put articles out there. Obviously, they going off of whatever data that they're reading or whatever the case may be. But when I really start looking at, when you start looking at everything with a grain of salt, you got to really start, how do you really know this?
Yeah. How? Where are you getting this information from?
Yeah. Signature Bank was the second bank that collapsed. And SVB. But again, how do you really know?
Do you know how fast the banks collapsed back in 2009?
Signature Bank, according to the article we just read, your homeboy, what's his name, Barry Frank, whatever he said we were fine on Friday. Your man said we were fine on Friday until Friday afternoon, and then everybody was panicking, and then on Sunday we got shut down. What?
Yeah, no, that's crazy.
Bro, that's cap.
Yeah.
Something was happening already. to make your customers say, yo, I got to get out of here, yo. You guys ain't got no money. Something's happening right now. It's something that y'all been telling to your shareholders and everything like that. Because, yo, how you say you was fine on Friday and then 48 hours on a Sunday, out of all days, the FDIC come and they shut y'all down?
Yeah.
Nah, bro. That don't make no sense. That's like if somebody telling you, like, yo, man, I need some money. I'm getting evicted tomorrow. Like, nah, you knew you was getting evicted, bro.
Yeah.
Your eviction date didn't just pop up on you out of the blue 24 hours. Like, you knew you was getting evicted and you needed some money.
Nah, that's a fact.
You know what I'm saying? And yes, I understand the balance sheets, right? But I'm just trying to tell you, like, people cook the books all the time. But, like, I don't want to say too much because I don't want these people coming back to me trying to sue MG.
I think I think you'd be fine. I don't think he's going to sue you, but I mean.
I'm just saying.
Yeah.
Like, everybody's selling off shares. When you start seeing movements like that, it's like they knew what was happening. When you start seeing executives start selling shares at a large scale, they knew they were done.
Yeah.
Like, if I say, yo, Tooks, I got to sell this camera today.
I'll be like, wait, what?
Like, yo, I think I got to sell this light today, Tooks.
Yeah, something's up.
Something's up, bro.
What's going on, bro?
What's going on?
True.
Like,
yeah.
something is going on and something is happening, right? And when you start seeing that type of movement, now your customers start paying attention. It's like, man. But then that just goes to show you that not everybody's doing good business out here, too, at the same time. People get over-leveraged every day. Hence why I always say don't be house rich and cash poor. Like, big boys do it, too.
Yeah.
Because, look, it's human behavior. People just are risk takers and they do shit. So this is what these cats are doing, too.
So my question is, what happens to the people who had loans with those banks? Like
what kind of loans?
Anything.
Their loans are good. People gonna still have to pay their loans. You have, you know, it's a loan. They lent you the money. You're gonna have to pay it back.
Right.
Right. People who had cash deposited, FDIC said they're gonna insure their money to make sure that they get whatever money they had, they can take it out.
Now, is that up to a certain amount of money they have?
Typically,
Insured?
it's 250,
right?
250,000, but they said they're going to insure pretty much whatever money you had. You can take it out. So the depositors are fine.
Okay.
They're good. But this is why I say, put your money in real estate. You can't go wrong.
Yeah.
This is why I'm here. I'm trying to tell y'all, if you buy real estate, it don't matter if the market is going to go up. It doesn't matter if the market is going to go down. It doesn't matter left or right. Your property ain't going nowhere unless it burns down, blows up, or the earth explodes. God forbid. Real estate is the place. If you have over $250,000 in cash in your bank account, you need to ask yourself, why is it there?
It's a lot of
sitting there.
It's a lot of money.
First of all, inflation's eating your joint up every day, right? But why is your money just sitting in the bank? Why is your money not making money babies? Why? So you got to ask yourself. When I hear people say, I got $1 million in the bank, I'm like, why?
But don't you gain interest over time?
Interest of what? What are you going to pay me? 0.01?
Yeah. People always say that, though.
I don't want that.
Like the more
Why
money
would
you
I
have
want
in
a
it.
0 point anything of interest when I can go out here and get a 12% return, 15% return with real estate investments?
Or something tangible, yeah.
And then if the market does crash and I lose equity value, okay, is my cash flow still good?
Yeah. It's true.
So I say all this to say, ladies and gentlemen, smash the like button while you're at it. But I'm saying all this to say, real estate is and will be and continue to be one of the best investments you can make. Period. Point blank. You cannot go wrong with buying property. I don't give a damn about the interest rates. I said this before and I say it again. Make sure you are buying right. You're buying smart. You're not paying over asking price. Hell, not even paying asking price in this market today. Buy something that needs work. Put your sweat equity in it. And real estate will set you free. Not one property will set you free, but if you continue to invest your money into real estate year over year, even if you buy a property every 2 years, learn how to invest. And you cannot go wrong. I'm not worried about no bank failures when I have money in real estate. It doesn't matter to me what these banks are failing. Great. The bank failed. If this directly helped mortgage rates tumble, great. That's good for me. Because I'm an originator. That means more people are going to get off the sidelines because it just got a little bit more affordable for them. Great, I make money. Rates go even lower. Hell, the portfolio lenders' rates will go down. So when we buy investment properties, those rates are lower, which means cash flow will be greater. You can't go wrong. You can never go wrong with buying real estate. I'm encouraging you. If you have over $250,000 in bank and you're worried about your money, don't worry. Go just buy real estate. You're going to get tax benefits. You're going to get cash flow. I mean, what more can you... Equity goes up, you win. Equity goes down, you still win. I can still go touch my property.
Yeah.
What if the FDIC said, you know what, we're not insuring nobody over $250,000. You shit out of luck. You just lost all your cash having it all in the bank.
Yeah.
That sucks. That sucks. Imagine if they say, yo, we can't bail y'all out. We can't bail the people out. Sorry, we're not insuring anybody over 250. We're going to stick by our rules. What? Even when the stock market crashes, right? Think about it. When the stock market dips like that, if you don't know how to trade options or futures and all this other, stuff, like, you're just watching your money, bloop. You're watching your 401k, boop. But when it's up, it's up. It's stuck. It's great. But, if you know how to trade, if you know how to do options and futures, shout out to Market Monday, shout out to Wall Street Trapper, right? Shout out to Aristotle Investments. Shout out to all the people who are teaching that game. You cannot lose if you know how to play that game. But if you just put your money in the stock market, you can still win. But when that thing go down, you're losing your tangible money. This is why I like real estate. Because if you know how to invest, you can use other people's money. You can leverage capital stacks, the bank. You get tax write-offs, depreciations, all types of wonderful things that comes with being a real estate owner. And this is why I always preach, don't wait to buy real estate and wait. Because you can't go wrong. No way you slice it. Now, you can go wrong, let me correct myself, if you buy wrong. If you're not taking the time to learn, if you're not taking the time to educate yourself on analyzing deals and things of that nature, yes, you can go wrong with that. But in most cases, you can't go wrong with real estate. Any questions, Tooks?
Also, I had a question before about the numbers, the bank failures from like 2009. In 2010, I think it was like 390 or 380.
The bank's failures?
Yeah.
Okay.
So that was like in a matter of like... A year, 300 bank failures. So...
Dude, go back to that. Let's bring that back up on the screen. Because I want to show you what my mindset was at this time.
Yeah, because we're looking at 2 right now.
And people like going crazy.
Deal, and it's like 300. So I'm like, wait, where was I in 2009? I was graduating high school, but I don't remember any of that happening.
So you remember all my stories I keep telling and everything? I said I lost everything.
Yeah. And
I had no YouTube and no mentors and no MG the Mortgage guys to look at. And I keep saying, I wanted to kill myself and I tried to kill myself twice. Haha. What did I have? I always tell you, I'm watching the news. And what am I seeing on the news every single day? A bank is failing. Put up the list. You got to think about this, how scary it is, right? No, it's 149, right? So 140. So that's basically half the year. Like every other day, a bank is failing.
So that's just the bank. The whole bank is gone.
Done.
So like, I don't want to say any names, but like a bank, like a whole branch is
Like
just
countrywide, gone.
That many banks were gone
Yes.
in '09. That's crazy.
And then 2010, look at it, 157. So you talking about probably on average, every 2 days, a bank was failing.
And money from people who have their accounts and
Whether
money
it
in
was
there.
mortgage banks, whether it was depository banks, banks were failing. People were getting laid off. Big banks, small banks, mid-sized banks. People were losing their jobs left and right.
Damn.
So when you really think, and this is why when I be telling these stories of this time, I be like, yo, I wanted to kill myself. I tried to commit suicide. I lost everything during these years. And all I was watching on the news was all this fear mongering. This is why even a couple years ago, when we was upstairs, I said, yo, recession starts in your mind.
Yeah.
And I've said that a few times. And it starts what you putting into your mind. During this time, YouTube content creators wasn't big. IG was just really coming out. You know what I'm saying? So there was really like,
It wasn't even out yet.
no, I think it came out 2011.
Yeah, IG wasn't out yet.
And it was all pictures when it came out.
Yeah,
it wasn't even
just-
video.
It's Facebook and YouTube.
And Facebook just really turned from college
Yeah.
app to what it
So
is
what it is
today.
now, yeah.
So really think about, what do you have to watch all day? The news.
Yeah.
They fearmonger your life to death. So imagine turning on the news and the TV every single day. This is when TV was even popping, still cable TV, right? So think about turning on the news every single day and seeing a bank failure or rumors of another bank about to fail, and then it fails. Really think about that shit. Think about on average probably every 2 days.
Every 2 days on the news, you're hearing about some bank. If not, yeah, every 2 days. Every day
Yeah.
a bank is failing, and all you have is TV to watch.
And you saying what? Failures.
Yeah. So you're probably freaking out.
I
Worrying if you're
I
gonna
tried
lose
to
your job.
kill myself, bro. I lost everything. I'm seeing all this, and the world is ending in my world.
Yeah.
Like, the world is ending. So when I speak about this type of stuff, I'm telling y'all from my experiences too. So when I see content creators putting out content about, and it's surrounded by this fear mongering stuff, I just be looking at it like, damn, man, this is pitiful. Because honestly, is this a big deal? Yes. I'm not trying to say this is not a big deal that a bank failed. But let's face it, if you can see this chart, banks fail all the time. For those of you just tapping in, this is a list of bank failures since 2019. 2019. And it's 513 banks that has failed. What's that, 14 years?
Mm-hmm.
But the bulk of it was during the Great Recession, 09, 10, 11. And if you look at the years, that number is decreasing every single year. It's decreasing. Still a lot of banks going out of business, but it's decreasing.
Damn, even in 2017, there was
Eight
banks.
failures.
And 2017 wasn't really a bad year, right?
No, it's a great year. Every year is a great year.
That's crazy. So yeah, I think a lot of this has to do with a lot of media and social media content being pushed to kind of get
Likes and views
yeah.
and sell products.
We are talking about it, but I think it's coming from a different place.
But this is why I always tell you, I come from a non-biased place when I
Yeah.
speak about information. I'm really just trying to give you my opinion on things,
right.
right? Yes, I'm going to tell you go buy books and shit like that. Of course. Come on, I'm not stupid. Got 1,000 people on here. Go to mgbookstore.com, pick up some books, right? Learn. But I'm trying to tell you something that's actually going to help you in your life because I'm telling you what's helped me. And when I got out of this, you can take this down now. When I got out of this fearmonger, and we put the links in the chat too. So you want to read the articles. I'm going to put the links for all the articles in the chat again right now that we put up. So you guys can go read those yourself. But like, what I'm trying to tell you guys is, and go to mgbookstore.com. Tanisha, thank you for putting that in the chat. But like, you have to you have to really just stay the course of what your goals are. Don't let news like this get you off your game.
Yeah.
Let news like this motivate you to find the opportunity that could be around the corner. So whatever you have to do to get yourself in position to execute, you need to get yourself in position to execute. Because let's just say 10 banks failed this year. That would be a lot.
I think then at that point it may be a little bit like, okay, what's going on?
No, not me, because I went through a time where I saw 389 banks or 382 banks. I didn't do the math, but in a 3-year time frame.
Yeah, but things can repeat itself. History kind of repeats itself.
Yes,
so.
but there's laws and rules and regulations in place now, so they won't repeat themselves.
I think somebody had a question about, which is pretty, I mean, I know you talk about it all the time, but they had said, how did you lose everything in 08 when the market crashed, but you've been a real estate investor?
Because I lost everything.
Right.
Like, what the hell? Like, look, this is my message. How many? I don't know how many times I gotta talk about this, right?
Yeah.
My mess is my message. When I tell you guys don't be house rich and cash poor, I'm telling you from my own experiences. I'm telling you there was a time in my life that I was house rich and cash poor. Like, I didn't have proper amount of reserves. I didn't have to put 20% down to buy properties.
But that was a lot of people.
This was the wild cowboy days.
Right. So I think that's what
you
I was
do
kinda...
100% financing on every property because the rules and regulations that are here today were not there then.
Right.
So you can buy all these properties. It don't really mean shit. And then at the end of the day, tenants don't pay you. You think tenants just stop paying because of COVID? Like, what? This has been around forever.
Yeah.
You know what I'm saying? And then the rules and the regulations, again, you can foreclose on someone much faster than you now. So doing all these loan modification and workout plans, none of these shits was in place before President Obama came in play. And if they were, the banks would do everything in their power not to do it because they want to foreclose on you. I was part of a class action suit against, I'm not going to say who. And I actually won $750 as being a part of this class action suit, which thousands of people were a part of. And that was like a slap in my face because the courts found that they were wrong for foreclosing on people so fast without giving them the proper time to figure out whatever they needed to figure out. And you gave people $750?
That's life-changing and could be life-ending. Some people probably really... Like,
that can almost ended my life.
750 is like, damn.
No, they gave me $750.
Yeah, that's crazy.
Like, what?
Yeah.
That's insane, bro. That was like a slap in the face. It's like, you know these banks are doing wrong. You know everything was wrong. You know it was wrong.
Yeah.
But you give people, how are people supposed to get their life back together after that? That's crazy. But that's the time that we're living in. Crazy. And I didn't even know I was a part of this class action suit until I saw a letter in the mail one day. I'm like, oh, this is interesting.
Yeah.
So I say all this to say, my mess is, I wasn't Countrywide. The mess is the message. Definitely wasn't Wells Fargo. Right? But the mess is the message. And this is why I'm able to get on here and talk about these things and tell you, like, yo, don't panic. Like, look, so somebody said, so many people lost everything in '08. I had 3 closings in one day with people sitting at the table actually signing documents and the banks closed mid-closing. Facts. I got stories.
Mid-closing?
Bro, I've had deals, same like, what's his name?
Swansley. Yeah.
I've had that same situation happen. This is what I'm telling you, I tried to kill myself, bro, because it's like, I'm trying to get myself together, get on track, and you, like, yo, the deal about to close tomorrow, and the bank just shut down. Like, what?
Damn.
The bank just closed? How? I need the commission check. Like, fuck. And now I got 2 small kids at this time. I'm like, yo, this is nuts, B.
Damn.
I done burned through my cash because I'm young, 20, 25, 27 at this time, 28, making money. And then you think money grow on trees. And then you're like, where's the money at? But now you got all this debt and overhead now. And it's like, baby is crying. Need food. Wait a minute. I gotta pay employees. What? My car note due. What?
Yeah.
And then you're looking at your nice fancy suits and your nice little watches. Like,
I gotta put gas in my car too.
I ain't got no gas money. I've had that happen. The most embarrassing thing in my life was literally I'm sitting in a 750 Li Beamer with a $2,000 suit on, with a beautiful Breitling watch on. And I literally had $5 to put in my car. I said, this can't be life. You never know what someone going through.
That's in 2010.
This was like, I think 2009.
Yeah, wow.
Because when did I get the Beamer? 06 I got the Beamer? Yeah, so this was like 8, 9, somewhere around there. It was like 2 years. I had the Beamer for like 2 years. Yeah. I'm telling you. Just like that. Your whole life. I said a message on my IG the other day. Your whole life can change in a blink of an eye. That was the Wild Cowboy days for me. I come into the game broke. I don't know nothing. Then I'm up. You know what I'm saying? I'm up. I'm doing my thing. I'm making money, buying shit, properties. I'm living. I'm in a club, popping bottles. I'm having a good time. Blowing money fast. Life is good. This shit's rain on me forever.
Yeah.
I'm hiring all these telemarketers. I'm doing all types of shit. Like, blink of an eye. Like, what do you mean this bank closed down? It's nothing. Another bank closed down. Then another bank closed down. Then another bank closed down. Like, what are y'all talking about? We're in a crisis. I don't understand. Remember, there's no education for this stuff.
Yeah.
I was taught by ex-Wall Streeters who taught us how to be savages and killers on the telephone. And then now, blink of an eye, your whole life changes. So I tell y'all my message all the time. Like, the message all the time. So when I tell you guys, yo, don't sit out here, be house rich and cash poor. Don't sit out here and do things to keep up with the Joneses. Stay in your own lane. Run your own race. I put out a whole video about this. Running your own race. Don't let I definitely thought I was Big Meech, Larry Hoover. Like, I'm thinking I'm everybody you could think of. And because that's what we idolize, drug dealers and ball players. So when you grow up from a hood mentality, no one's training you, you ain't got no common sense, no financial discipline, you get all this money very young and very fast. This is like selling drugs, yo.
The legal way.
The legal drug, I sell money for a living. That's what I used to tell people. I sell money for a living. Because it's the truth. I sell money for a living. And that shit can go. So when I tell y'all, yo, don't do this, don't do that, don't do this, it's because I'm telling you, don't make the mistakes that I made. I'm telling you clear as day. I don't know how much more transparent can I be. I'm telling you, don't do it to yourself because being broke sucks.
Yeah.
I think we did a video on that. I did a clip on that one too. Being broke sucks. I've been broke. I hope to God I never go broke again. I hope to God I never go broke again. So you have to follow what I'm saying. And if you don't, it's okay. Follow your own, do whatever you want. I can't convince you to build wealth. If you're in a position to build your wealth, do it at your pace. You don't have to rush this, man. Everything happens in God's divine time. You don't have to rush greatness, man. Greatness comes with persistence, consistency, you know what I'm saying? and execution of your goals. And when preparation meets the opportunity, the success will happen for you. We said, I just put out the clip, the grandpa clip, about your 20-year self. You fast forward to the 20 years your age. Like 20 years from now, I pray that I'm going to be super up. But I know anything can change.
Yeah.
Just like that, in a heartbeat. Like anything can change. Life can happen to you. Hell, I got into a fender bender this weekend. I didn't even tell you that. And Rhonda, she got all scratched up because of me, my stupidity. That's a story I tell off camera. But my whole life could have changed at that moment too, for the worse.
Yeah.
Of not being on my P's and Q's and being and just being foolish. So when I tell you guys, yo, watch your step, be careful what you're doing, be grateful for your whole process and your progress and everything that you got going on, and just don't rush your greatness, man. And don't follow what people are saying to a certain extent. Do your due diligence, do your research, but do your moves according to you. Be prayerful about it. Take your time with it. Make sure you understand what you're doing. Yo, then you execute. Don't have analysis paralysis. I'm not saying sit here and have analysis paralysis. I'm saying, yo, execution is the key. And God's timing is everything. What Ruth said, I can't read that. What she just said.
In 2008, I was economically stable, good job, and had all the required to buy a home and probably more. I didn't take advantage of that opportunity. Do you think that this will be an opportunity?
Ruth, are you still economically stable, good job, and you still have all the requirements to buy a home and probably more? If the answer is yes, then there will always be an opportunity for people who are in position to execute.
Yeah.
Because you can create, and she says yes. So Ruth, you can create your opportunities. We all have the opportunity to create our own opportunity every single day.
Somebody said companies affected by SVB blow up are Airbnb, Coinbase, DoorDash, Stripe, Uber, Tesla, and a lot more.
Okay. What does that have to do with me buying real estate?
It's true.
If they go away, a new competitor is going to come right behind them. You know what I'm saying? That's the world we're in right now. There's another, what was the companies again?
It was Tesla. I know Tesla was one of them.
I know it said Airbnb.
Oh, Airbnb, Coinbase, Tesla, and the comment disappeared. Oh,
DoorDash, Stripe.
I thought somebody opened the door. SVB, Airbnb, Coinbase, DoorDash, Stripe, Uber, Tesla, and a lot more.
I guarantee you there's companies right behind them right now, waiting, praying on their downfall so they can now be the #1 leader and take all their customers. This technology era
That's true.
will produce other DoorDashes, will produce other Stripes, will produce other Ubers. There's Lyft. If Uber goes, I still got Lyft. And if Uber goes, Lyft is still there, then there's going to be somebody that's going to come behind Lyft. There's always going to be another player. Ruth, then go get you a second home, Queen. Don't wait, don't hesitate, go get it.
So I already asked that question about the bank with the mortgages.
So
When
nothing
it closes,
happens.
not-
If they
no,
close
yeah.
this, another bank will take over your mortgage, that's all.
Right.
You still have to pay your payment.
I think that happened to me when I had one of my previous car loans.
That happens all the time.
Yeah.
That happens all the times.